Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Wednesday, July the 18th, 2012. Well, a continuation of the trend to the upside today, and a candle that has a lower high but a higher low, but which didn't change the trend to the downside. Previous day's trading we had a candle with a higher high and a higher low, so the previous trend to the upside remains in force even though the market failed to extend the high of the previous day. Interesting trading over the previous 3 days where you have these very small bodied candles, and it does raise some doubt about continuation of this trend to the upside. What we'd like to see as a trend develops to the upside, the size of the body of the candle becoming larger and larger as the trend moves on its way to the upside, and we'd like to see them white, and that denotes the buyers making net bullish progress and making greater and greater net bullish progress as the trend continues. We haven't had that, and that does suggest that there is a possibility of a change of trend to the downside. A couple of factors against that, however, and if we look at the past 4 or 5 or 6 trading days, we have these shadows on the bottom of these candles, and in particular for the previous 3 trading days, very large shadows highlighting the sellers losing commitment down just below or around the 122 region. Very strong price rejection. The 2 days prior to that we saw upside price rejection from 121.55, and then the day prior to that once again from the 122 region. So that is a very solid area of support for this market. Now if the market breaks out through to the downside in a bearish manner below 121.55, there isn't any major support until the market trades to 118.76. So it could be significant, but this is very strong support all the way through here in a large zone extending from 121.55 up to 122.87. So we are seeing quite some indecisiveness here, where the buyers aren't strongly supporting this trend to the upside because of the size of the body of the candles, but the sellers certainly aren't finding any strength to change the trend to the downside. Having said that, however, for each of these trading days, for the past 3 or 4 trading days, we've seen the buyers close with control of the market. So even though they aren't making a lot of net bullish progress between the open and the close, they are continually showing us that they're keen, and they are still closing with control. So the sellers really aren't attempting to take control of this market. It does suggest that this market may continue trading sideways within this range for a period of time. Now against that, however, is the resistance at the Tenkan-sen, the green line here, and we can see here for the previous day's trading there was rejection from around that area, and today the market has closed around that area as well. So that will be a very important level moving forward. And already today, if we look as this current candle is developing, there is a possibility that we could close above there, and it would change the short-term momentum significantly if we can have a bullish close above there. We do have strong resistance at 122.87, and then above to 123.28, and above there a minor level here with this minor swing low around 124, and then an important level around the 124.50 area, which corresponds with the Kijun-sen, the pink line here. In terms of the Fibonacci extension, however, this does suggest that there is possibility for a change of trend. We're comparing the current first time frame uptrend to the previous time the market was trending up, and looking at the Fibonacci relationships between them. And here we've seen the market test to the 38.2% and test to the 50% level, and to be rejected from there in a minor way. So moving forward, that is a very important level, and it does suggest that there is a possibility for a change of trend to the downside. Above there, if we do see the market test up to the 61.8% level at 123.38, and we see selling coming in, it could set the market up for a change of trend to the downside. But if we see a bullish breakout and close up above there, we could see the market test to above the 78.6 and test to the 100%, which coincides with the Kijun-sen, and that is quite a significant area, around 124.50 roughly. Now in terms of the Fibonacci retracement of the prior downtrend, and here we're seeing the market find some resistance around the 23.6% level. We've just in a minor way closed above there, closed just below there for today's trading. It's only a minor level, not as important as the 38.2, 50 and 61.8% levels, but we're not seeing bullish activity up above there, and that just suggests that there is a possibility for a change of trend as well. But certainly this strong support below doesn't make one confident of a change of trend to the downside. Now, in terms of Ichimoku, obviously the market is, and we're looking at this current candle that's closed here, not the final one that's still developing, but we have a market that's bearish in the long-term time frame by trading below the cloud, bearish in the medium-term time frame by trading below the Kijun-sen, and just pretty much neutral in the short-term time frame by trading at the Tenkan-sen, the green line here. The Chikou span is confirming the bearish activity that we're seeing in the longer time frames. And interestingly, that Kijun-sen is pointing flat, and we've seen the market attempt to rally back towards there. Usually a very strong possibility of the market rallying towards the flat Kijun-sen, which represents equilibrium in the medium-term time frame. But we certainly aren't seeing a rally with a lot of confidence by the buyers because of this solid resistance around 122.87 and 123.28. And moving forward, they are very, very important levels if we are going to see the buyers take control and trade higher. But certainly the strong support down to 120.155 is very, very important for this market.